And big bank earnings kicking off on Friday as big name players such as JP Morgan and Citi gear up to report their quarterly results. Let's get right to Yahoo Finance's David Hollerith with a preview on what investors can expect.
Yeah, so Josh, the outlook for banks has changed a lot, sort of in the last few weeks of Q3. Deposit outflows don't really look as much of an issue as they were for Q2, but the Federal Reserve's signal to keep interest rates higher for longer is obviously going to pressure banking profitability going forward. And this is sort of a time for banks to come out and show investors that they can hang with a higher for longer environment. And now I would also point out that given the rise in the 10 and 30-year bond yields, the unrealized losses that banks keep on their balance sheets are going to be worse this quarter. Taken together, obviously, bank stocks have widely underperformed the S&P year to date. And, there's going to be a big question here about whether or not this is sort of the bottom, so to speak. Three of the big four banks report Friday, and JP Morgan Chase is expected to sort of steal the show as being the lender that is best positioned to withstand higher rates for longer. It's the only one that's expected to show a jump in core revenue compared to last quarter. It's also supposed to outpace peers on the year ago period. Bank of America and then Charles Schwab and then Truist are among the larger banks that have higher unrealized losses. So they're going to be needing to sort of thread the needle here. Again, this has been framed by analysts as more of a stock performance issue than a liquidity issue like we saw in the spring. But investors are clearly very mindful of this. So we'll want to see what management says about that. And then I think just going forward on the bank credit side of things, which is sort of the looming issue, commercial real estate. I think that is not looking to be noticeably worse, although we are expecting to see most banks sort of take higher net charge-offs, meaning they're going to be marking down more loans as having borrowers that are unlikely to repay. So all that taken together, we're kind of at an inflection point where, we're kind of staring at the worst of what bank lending is looking like. And most is hinging on the forward outlook for the next couple of quarters. Results actually do not appear to be that bad, but again, it's going to hinge a lot on how banks are looking to the future.
Yeah, a lot to consider here as we come up against this quarter. It will really be interesting to see if it's the bottom for some of these banks in terms of performance around rates. David Hollerith, and if it's the bottom in rates for that matter. David Hollerith, appreciate it.